Welcome back to this session of Wilmington City Council's Finance and Economic Development Committee meeting. As you can guess, we were having technical difficulties again. This hearing will not be live on channel 22, but you can watch it on YouTube. But there'll be tapes that will run on 22 at a later date. So far this evening, we've heard from the Public Works Department with the Water Sewer Fund, and we also had a presentation on the 6-year Water Sewer Fund plan. Now what we're going to do is the last item for our hearings is revenue projections. But before we jump into that, I wanted just to acknowledge that we are joined by President Hanifa Shabazz, 1st District Councilmember Linda Gray, 3rd District Councilmember Cynthia Oliver, 4th District Councilmember Michelle Harley, 5th District Councilmember Vash Turner, 6th District Councilmember Yolanda McCoy, 7th District Councilmember Chris Johnson, and Councilmember at Large Loretta Walsh. I hope I got everybody. All right. So our last item for this year's budget hearings is to review the revenue projections for fiscal year 2021, and these were reviewed last week by the Wilmington Economic and Financial Advisory Board. And council members, if you check your email tonight, you will see that you have a letter from the chairman of that board, Mr. Tom Chopa, verifying these revenue projections. So who is going to make the presentation this afternoon?
I will. This is Rob Winkler.
Rob, you ready to get started, Rob?
Ready whenever you are.
All right, let's go.
All right. So can we get the slides up here? Okay, so, as everyone has heard, many times at this point, the budget that was initially proposed by the mayor was developed pre-COVID. So obviously it doesn't take any effects of COVID into account. What I'm going to be presenting to you today is a revised projection inclusive of the effects of COVID. So including COVID, the general fund projection is 158.1 million. So just to clarify what you're looking at here, for each slide, we've included not only the total for that fund or account, which in this case is the 158.1 million, but also the change from last year's 2020 budget, which is 11.8 million down. On top of that, we've also included the change, below that actually, we've included the change that's specific to COVID. So in this case, the general fund is down 13.6 million relative to the pre-COVID proposed budget. You can also see those changes up on that table on the right. We've shown 5 years of history along with the pre-COVID budget in blue and the post-COVID budget and estimated actuals for 20 in gold. All right, so before we really go any further into the individual details, I think it's important to clarify that this projection and really any projection made during the COVID crisis inherently embodies a significant amount of uncertainty. So the situation that we find ourselves in right now really is unprecedented, and there are no real parallels to this in recent history. Now that said, we've attempted to make what we think are some conservative general assumptions. So first, this model assumes that businesses will begin to reopen mid-Q1. This isn't a statement of policy by either the administration or the state, and nor does this assume that social distancing and associated business closures will end Q1. This is simply our base assumption regarding when business activity will start to resume. Beyond that, we assume a sort of flat V recovery. You may have heard some discussion about the shape of the economic recovery in 2021, whether that's something like a V or a W or a U. We assume a sort of flat V, meaning significantly down in Q1 and then growing back towards normal, but never quite getting back to normal throughout the remainder of the year. That's just our baseline assumption. Most of the revenue categories that I'll talk about in a moment have more specific modeling than that. And finally, we assume that there won't be any additional revenue coming from either the state or federal governments, beyond those we already receive. I'm sure everybody's heard about the CARES Act, but unfortunately, the CARES Act only covers COVID-related expenditures. It doesn't cover any replacement for lost revenues. And obviously, the administration will continue in its efforts to seek out additional revenue support. But unfortunately, for the purposes of this projection, we have to assume there's no additional revenue help coming in 21. All right, so given all of that, there's still downside risks that simply can't be ignored. First, social distancing and business closures could continue on later into the year. And beyond that, we could face a deeper, slower recovery. So obviously, in both cases, we'd expect the revenues would be lower than projected here. However, we feel like we've made prudent assumptions given the data that's available. All right, so can we get the next slide? Thanks. All right, so what you have here is the breakout of the general fund revenues by percentage. So obviously what you can see there is the city's largest revenue source is wage tax at almost 42%. Beyond that, the remaining revenues are split roughly in half. Property taxes making up 27%, and all of the other revenues, that's all the state transfers, the fines, licenses, permits, fees, everything else, making up roughly the other half of that. Next slide. All right, wage and net profit taxes. So wage and net profit taxes, like we just saw, are the together are the largest of the city's revenue sources, collectively coming in at almost 66 million. They're also probably the most economically sensitive in terms of COVID. So prior to COVID, we were projecting healthy wage and net profits increases. Now, unfortunately, we're looking at a $4.6 million loss compared to the FY2020 budget, or about 6.6 million down from our pre-COVID estimate. So our pre-COVID wage tax base was about 66 million, which includes those 400 and a bit loss for Barclays, which occurred in 2020. So to that, we've applied a 22% reduction in Q1, which is based on expected layoffs and reduced earnings from COVID. Where we get that number is a blended percentage based on an assumption that a relatively large portion of the low wage workers will end up unemployed, at least in Q1, while higher wage workers will see comparatively smaller impacts. Beyond that, we expect a recovery throughout the year, ending with the year being collectively about 9% down, or a $5.9 million loss. On the net profit side, we have both Q1 and Q2 being about 17% down. Okay, property tax. So property tax, again, is the city's second largest revenue source, at a bit over 1/4 of the total general fund revenues. It's also the largest revenue over which the city has direct control. For 2021, however, there's no property tax increase budgeted. So the 21 projection base is 43 million, which is actually up $290,000 due to a variety of items that came in post FY20 budget. However, due to some code revisions that came in during FY19, we've knocked that down about $200,000, and this is all pre-COVID. Now, post-COVID, we've doubled the allowance for bad debt to 4%, which actually knocks the whole thing down by $857,000. Now, we don't expect that there's going to be any direct impact to the property tax base, but really the bulk of that change is all coming from that bad debt allowance. All right, next slide. Okay, other taxes. So other taxes, this is composed of franchise fees, head taxes, and real estate transfer taxes, meaning the sale on properties in the city. Collectively, these are down a bit over 20%. The largest part of that being head tax and real estate transfer. Head tax is down nearly $700,000 from the FY20 budget. 165 of that is all pre-COVID due to the Barclays reductions, a 600 job exemption for Comores, and along with a few more base adjustments to sort of true up the revenues compared to 20. Post-COVID, we're looking at a bit more than $500,000, really due to the impact on employment in the city. On the real estate transfer side, we previously actually been looking at very solid revenues for real estate transfers with a strong upward trend in 20 and both 21. Post-COVID, however, we've knocked this down over $1 million, really because we're assuming an 85% reduction in Q1 relative to the pre-COVID budget. Next slide. Okay, licenses, permits, and fees, which collectively is projected to be down almost 1.2 million from the 20 budget. However, roughly 3/4 of that is due to the removal of the rental license fee, which was budgeted in 20, but subsequently wasn't passed into law. And that's that 857 you're seeing there. Post-COVID, we expect to see a $415,000 loss due to permits. really just due to a slowdown in permitting activity, mainly in Q1. We've also got a $74,000 reduction to fees. Really, that's almost entirely due to the city temporarily not requiring payment at parking meters, which we assume ends sometime after Q1. All right, next slide. All right, fines. So fines, which is collectively criminal, instant ticket, red light, and parking, is down almost $990,000 from last year's budget, or about $1.2 million from the pre-COVID revenue projection. Criminal fines are down only slightly, really based on trending. An instant ticket is down about $160,000 compared to FY20 due to L&I refocusing some of their efforts. The big changes are really on the red light and parking side. So as to red lights, we expected them to be more or less flat pre-COVID as those new 17 cameras are starting to come online in FY 2020. However, post-COVID, we're looking at about a $665,000 reduction due to reduced traffic in the city, which is about a 30% loss in Q1, and then a recovery over the next couple of quarters. Similarly, on the parking side, we actually were looking pretty solid pre-COVID, projecting a $390,000 increase, mainly due to improved collections on new and existing tickets. However, since the city has suspended ticketing, booting, parking enforcement for now, we've assumed a 50% reduction in Q1. And given that we expect some employees to continue to work from home, we actually think that those losses will continue to some degree throughout all the way through Q4. In total, that gets you a bit more than $500,000 in losses. All right, next slide. Okay, interest. So interest, this is the earnings from investing the city's cash balances. So for FY21, this is projected to decline more than $800,000 relative to FY20. The largest factor here is simply that interest rates had dropped so precipitously really over the past quarter or so. To give you a sense of really what we're talking about here, during Q2, we were seeing interest rates on CDs of about 1.9%. That's now dropped to less than 0.5% or below. And on top of that, we have to include some presumed reductions to the city's fund balance as we dip into our cash reserves. Okay, next slide. So other governments. Other governments really has two components. First, the reimbursed port debt service for the sale of the port. This is up $275,000. However, that's based on the debt service schedule. Also, the state pension contribution. So state pension contribution is down $991,000 due to an issue with how this was calculated by the state. So at the end of FY 2019, the city learned from the State Insurance Commissioner's Office, which is the agency that determines the contribution amount based on insurance sales, that the contribution had been previously miscalculated and would actually be lower going forward. Because of that, we've matched the FY20 budget to the amount received in FY19 and FY20. Next slide. Okay, task force revenues. So the task force revenues are in total expected to be down $821,000 relative to FY 2020. So given the expected slowdown in corporate activity and LLC creation, we've reduced both corporate filing tax and LLC filing tax by 75% in Q1. and we've assumed that they'll start to return to normal by about Q3. That gives you about 180,000 down for corporate filing tax and about 400,000 down for LLC filing tax. Similarly, we've assumed that lodging tax is going to be hit extremely hard by the travel and social distancing restrictions. Previously, we'd seen some very strong growth in lodging with new hotels having come online in 2020. Post-COVID, however, we're projecting an 85% reduction in Q1, followed by a recovery by about Q3 for a year-end loss of $134,000. Next slide. All right. Finally, for the general fund, the county seat relief package. So similar to the task force, we're looking at losses of, in this case, a bit over $1 million, or about $200,000 down from the FY20 budget. So no changes expected in the statutory trust. This is capped at $1 million. We expect to get the whole thing. On the Newcastle County corporate filing fees, we're expected to see a similar impact as the similar impact as the task force corporate driven revenues. Again, 75% down in Q1, back to normal by Q3. However, on UCC filing fees, these are expected to remain roughly flat during the downturn for an annualized loss of about 1%. Historically, these have been heavily driven by corporate bankruptcies, and they've remained relatively flat during previous economic downturns. And finally, the pilot, or payment in lieu of taxes, which is a payment by the state for properties in the city that would otherwise be tax exempt. This is projected to be down $833,000 from the pre-COVID value. So where we're getting this number is that in FY19, the state provided a pilot payment that was more than $800,000 above the calculated base value. And it continued to provide this into FY2020. However, given the fiscal pressures that the state's presumably going to face due to COVID, we've projected the pilot will be returning to its historical lower amount. All right, next slide. Okay, so that's it for the general fund. I'm only going to give a very brief overview of water sewer, since we just had a very in-depth discussion about that. For water sewer, we are looking at $79 million for FY 2021. That's down about $4.4 million from last year's budget, or about $5 million due to COVID. Again, the same sort of assumptions apply as in the general fund. The biggest change here is really due to direct user fees. Again, as we heard Black and Veatch discussing, this is largely driven by a change in consumption, with commercial users using significantly less water going into 2021, along with some losses for penalty and interest. And finally, again, as we heard, there are no rate increases on the water sewer fund side. All right, next slide. Okay, so that actually concludes my overview of the 21 revenues for the general fund. Obviously, if you have any questions, I'm more than willing to take them now. Otherwise, feel free to reach out to OMB.
Right, any questions for Rob on the revenue projections for 20?
Yes.
Oh, already. Hang on a second. Councilmember Walsh.
Thank you. Could we go back to the property tax screen? The question that I had for them is, I'm assuming that we're working hand in hand with the mortgage companies and with the banks about what the situation is concerning people paying their mortgages. Could you tell me what the percentage is that we collect our property taxes from a bank or a mortgage company?
So I don't actually have an answer for that. I think that'd probably be a better question for the finance department and Brett Taylor. But we can definitely reach out to finance and get you an answer on that.
Council
Brett.
member.
Didn't realize you were here.
Yeah, council member, we think that I'll get a definite number for you. We think it's around 68%.
Okay, that's what I thought. And are we working with them to at least keep pace on what is happening with people and whether or not people are keeping, abreast of their mortgage payments?
It's on our list to do. We haven't specifically reached out to the banks yet. We wanted to see what after a first month of payments looked like. This year we did a billing for delinquencies of about $2.5 million, and we've gotten a pretty good response on it. We're getting about I think we've got 44% of it. People have gone ahead and paid. I think part of that may have been in response to the stimulus payments being made and them catching up. We're going to take a look at the April numbers to see where the trend is, but we do have some time. The banks, our bulk of the property tax payments will go out in July and will be paid in the August and September timeframe. So we'll talk to the banks ahead of time and see what they're doing with respect to escrows. I share your concern in that if people aren't paying their mortgages, they're not getting their escrows fully funded. So we have to talk to the banks to see what kind of impact that's going to be. So.
Okay, I just wanted to make sure it was on our radar.
It is.
All right, thank you.
Okay, Councilmember Gray?
Yes, thank you. It looks like the revenue production is like a -8%. Is each department going to cut their budget by approximately 8%?
Not necessarily. I don't think that's the way they're looking at the budget, just doing a flat cut across each department, but every department has been sending in numbers on budget lines that they want to reduce. And I think the administration is getting that ready, and we probably should have that in the next day or two.
Okay, thank you.
Yeah. Other council members with questions? Okay, I'm not seeing any. So this concludes our budget. Oh, I'm sorry. Yeah. Is there anyone from the public that would like to speak? I'm not seeing any hands. So once again, this concludes our budget hearings for fiscal year 2021. We have a finance committee meeting scheduled for May 18th. At that time, we'll go through the package, which includes tax rate, operating budget, a couple of others, capital program budgets. We will be looking at a substitute ordinance that night, and that's the one that will have all the reductions in the different departments, including city council. And then we will vote on the budget on May 28th. So I want to thank the administration and especially the budget office for all the work they did to get these hearings prepared so we could have a good discussion and a good understanding of what's in each department's budget. I want to thank all my colleagues on council for participating in all these hearings. I know it's kind of a long, tedious process, but it's important. And this year was even more important, dealing with the situation we're dealing with budgetarily. I also wanted to thank Marshall Bass-Knight, who does all the legwork on this, and will continue to do that through getting this budget passed on the 28th. She puts in an enormous amount of time, and I greatly appreciate it. So this is our last budget hearing for this year, and this is my last budget hearing. So I want to thank everyone, and this will conclude this session of Wilmington City Council's Finance and Economic Development Committee. Thank you very much.
Thank you, Bud.
Take care.